right, what is up? Wolf Den, let me know. You can see here, got my base case and chill hat. My office was being remodeled. Dan and his parents came in this weekend and painted. I would say we painted, but I taped some things and they mostly painted. So my office is kind of torn apart for the next couple weeks, but I'm here. I got my base case and chill hat. I'm base casing. I'm chilling. Go ahead and hit the thumbs up button. That's how we let people know we're here. We're not going to put this link a bunch of places. People will find their way here if they're interested. We've announced it plenty of times. All right. So let's get through the announcements really quick. I'm glad you guys are here. I do encourage you to try to stick it out for this whole thing because there's going to be some education, hopefully some aha moments. There might be some questions that come up. I'll do my best to get to them. We have a hard stop at 11. Guardians. Let me get into the events, okay? Let's go over the itinerary really quick. You are at the Wolf Den Town Hall. This is public. You can be a Wolf Den member, a holder. You could not be either, and you're still going to see what we're up to. Now, moving forward, I'll kind of explain. We're going to do more and more stuff only inside of the Wolf Den, and we'll keep this Town Hall public. Okay, so if you're sitting on the sidelines and you want to stay updated, that's great. I have less public videos moving forward and more really inside the den, and I'll explain why. Okay. So itinerary, first of all, events. Today, in 2 hours, there's a VIP event for Guardians, Dire Wolves, and Deej Engineering attendees. Okay, I will put the link to join in the appropriate groups. Again, it's 2 hours from now, so I'm going to hard stop in 2 hours. I don't think I'm going to go for 2 hours, but I'm going to hard stop at 2 hours if we get that far. If you're at the last months, you know these are very, very powerful. We have Jesse Elder back with us again, and Padram. You will be familiar with Padram because he's often trolling these comments. Yeah, but it's a very, very powerful get-together. Last month was amazing for people. So if you're a Guardian or above, or you're at a Deej Engineering event, or you have a ticket for 3.0, then you'll get that link shortly. Okay, I didn't put it out there yet because a bunch of people would go there and just wait, because people don't fully pay attention here in the crypto space. All right. Certainty Summit. So on 4/29, there's one day here in Seattle with Dan and I. Certainty Summit. Okay, that's 4/29. So if you're a CCA student, if you're a Diamond member of the Certainty certification or Certainty U, you can come. If you just want to come out to Seattle for a day, let me know. I can tell you the details. We really hammer home the solvable problem. We talk a lot about business treasury, resource allocation, that kind of stuff. It's not about crypto. It's about wealth in general. Okay? And of course, Deej Engineering, Phoenix, it is sold out. So I have nothing to sell you, but it is the 6th and the 7th. May 6th and 7th. The 8th is VIP. Okay? Just to recap, a friend of mine bought a town in Arizona called Cleator. You see all these sheriff badges and stuff. I am the sheriff of Cleator, Arizona. It's a fun little thing. So on the 6th and the 7th, we are in Phoenix. We're in Joe Polish. If you guys know Joe Polish, we're in his office for 2 days. We're going to do an amazing event. It's going to be a lot of fun. If you've been to the previous ones, you already know. And then on the 8th, for VIP Plus, we're going to bus people out to Cleator, Arizona. Again, it's a town that a friend of mine owns, and we're going to have a lot of fun. It's also Padram's birthday. If you know Padram, he is the one that really got me into the smaller cap and the altcoin crypto. And we're going to celebrate him out in Cleator, Arizona. We have a CCA certified. You see martial law band here. I was just listening to them. They are coming out to Arizona. They will be playing at the VIP event. They were nominated for Pulitzer Prize. Amazing band. Really cool dudes to hang out with, and they're coming out. And Randy Massengale, who is a mentor to us. He's Dan's mentor. Dan's corner man. Was also an advisor to Bill Gates in the 90s. Brilliant guy. He's coming out. He'll be spending 6th, 7th, and the 8th with us. So if you're coming to Deej Engineering, it's a huge opportunity. Of course, we have Dr. Jeff Spencer coming out. Always have Dr. Jeff Spencer with us. just amazing human beings, just bringing some wisdom that does not exist in the crypto world. People are all about the tech. That's great. We're a little bit more about the human. All right, the tech is not broken. The tech is fine. It's the behavior that is wrecking people. Okay, everybody's trying to improve the tech. Nobody's improving their behavior. That is why we're not making these quantum leaps forward that everybody thinks we should make, because technology does. Humans do not. So our events are a lot about humans being a certain kind of human, knowing yourself, making good decisions, yada, yada, yada. So that's the events. Those are the ones I'm going to be at. On 4/8 next weekend, I'm in San Diego for Dr. Jeff Spencer's Champions Experience. I believe one person dropped out, so there's one spot. Happy to talk to you about that. You can go find it yourself. It's a great experience. I'm excited. A lot of Wolf Den members are going to be there. Luna Den says hello in the comments. We'll talk about Luna Den in just a moment. Okay. First, we're going to get to the good stuff. We got rewards. Okay, giving away some rewards here. But it's like the dessert, right? This is the vegetables. I'm going to, a note on data. Okay, a note on data. Now, there's a lot of people that claim to be data driven. And when I asked, I said, Wolfden, I need all of your data. I want to compile it. I'm going to publish it for Guard and Guard BUSD, our base case. And the data is incredible. But all these data driven people sent me their sheets, and none of it, and Dan, who is my partner here, he is essentially a data scientist. I don't think he ever finished that degree, but his brain is a computer, and he worked on like the accounting standard, or he helped work on the accounting standard that Microsoft uses and all that stuff. And my language, ask him about the details. What happened when we look at this data is that people are not actually data driven. There's no way what they are tracking can inform behavior. They just are tracking numbers. So talk a little bit about data and a little bit about guarding your guard and the mental accounting bias, which Dan also introduced to me as a concept, and now I see it everywhere. That reticular activating system. Once you see a red car, you see red cars everywhere. Or once you test drive a red car or whatever. Okay. So I'm going to take a note on data. Let me show you really quick this distinction, this thing people don't quite understand about crypto. We have people sitting in Guard BUSD. In fact, there's about $40 million in Guard BUSD. Okay. You individuals sitting there are much more intelligent than the ones that are moving out of liquidity to catch upside. And let me explain why. I'm going to oversimplify it a little bit. I'm just going to plant these seeds. I just consider that you think about them, okay? Just think about them. You don't have to accept them as true. Just consider. This APR has been between 8 and, 10%, okay? 8 and 10% all month long. So the natural thought is like, well, if I unpair my guard, I'll get more upside because blah, 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 8%. Let me show you what I did is I just asked Kevin to drop $100 in the auto compounder and just let it run for 15 days. It was 15 days ago. Put $100 in, and as of today, it's 152. That is 52% in 15 days. It doesn't take a rocket scientist. You don't have to get out your calculator to see that 52% is exponentially more than 8% a year. 52% in 15 days. Right? This is how, in my opinion, you actually track data when it comes to a complex system. Why is this a complex system? Because guard price is changing, BUSD is stable, and the yield night is changing. There's a lot of variables. This APR doesn't actually mean anything. The only way to get a handle on a complex system is what we call the science of hindsight. You track it for some amount of time. And then what happens, see if I can find this again. You take your value now relative to your value you started with, and that is the real return. Notice how you would never come to 52% over the last 15 days doing calculations, speculating from this UI. You would never come to that, and you would make poor decisions. almost without fail, guard BUSD auto compounded will outperform everything over time. Of course, if you want to hold just guard, that's fine. That is not the most sophisticated or best risk-adjusted return. And people with wealth that want to lock in the things they want in life, they need to think in terms of risk adjustment, which is something that Dan talks about all the time. Right? We talk about that at almost all our events. He's really the expert in that. It makes sense to me. But if this isn't even close, right? But if it were closer, if we actually had to sit down to granular math, we would turn to Dan Nicholson, for those of you that don't know Dan. Right? So what a lot of people are doing is they're speculating. So, well, if guard's just going to go up, I should unpair it. One, you've increased the downside, and you haven't necessarily increased the upside, because not only are you getting paid out this night, which is buying back guard. Okay, so you're getting some appreciation of guard. What you are actually auto-compounding is getting you more guard. So that 8% that you're getting is also appreciating. And you've mitigated some downside with the BUSD pair, and you are getting trading fees, right? I put $40,000 in LP, no farm, $40,000 about 9 months ago, and it's over $2 million now. That's just trading fees. That's zero APR. But $40,000 to $2 million, it doesn't take a rocket scientist to realize those trading fees plus the appreciation of guard was a significant return, and it was very low risk. Okay, by virtue of being in LP, and also, the fact that it was super early. It was 9 months ago. All right. So that is the real world return. This isn't speculation. This isn't UI. Put $100 in an auto compounder, guard BUSD, and it's now $152. So if this was $1,000, it'd be $1,520, so on and so forth. No management, no chart watching, right? This is the golden standard. If the mistake people are making, I'm going to give you an example here, okay? The mistake people are making is kind of this mental accounting via frequency of exposure. They're really excited about guard. They watch the chart, pump, 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 and then they watch it go down, and they watch it go up, and they start making decisions, right? If you have a solvable problem, and you know what you need over time, there's no reason to watch the chart. The only thing to do, the intelligent thing to do, the lowest risk, highest return, most likely way you get what you want, is to check maybe monthly that you are on track. And if you are on track, leave it alone. If you say, hey, I'm going to be in guard BUSD, I'm on a 10-year time preference, okay, and you watch the chart today, you can only incur downside. You can only incur downside because your belief, what you say your belief is, you're going to sit there for, let's just say, a year. Don't have to go 10 years. Let's say I'm going to sit there for a year. Why would you look at the chart today? The only reason to look at data, the only reason to expose yourself to data is to justify a decision. If you've already decided you are not going to make a decision for a year, looking at data, you can only incur downside, right? Because it can go up, but you're not going to do anything for a year. Or it can go down. So you are incurring an emotional deficit that you have already decided you're not going to take action on. This is why people's long-term investment plans fail. Frequency of exposure. If you're trying to decide how long you're going to stay in it, then it makes sense to look at it at some frequent interval. But when you go, yep, I'm going to leave this for 5 years, and then you stare at the chart all day, you are creating an emotional high, which is going to have a greater emotional low, because we know that a loss hurts more than an equivalent, Jesus, having trouble here. Equivalent gain feels good. Okay. Loss hurts more than equivalent gain feels good. So even if it goes up 20%, back down 20%, you are at a break even objectively, but you're at the emotional deficit. You do that to yourself every day, you're going to start making really bad decisions, right? Unless your action is to buy more, buy the dip. We don't buy the dip. That's kind of counterintuitive. I mean, you can if you want, but that's counter to the solvable problem. That's a short time frame. And again, everybody says that, but let me explain. That doesn't happen in the real world. right? Track your own behavior. If you honestly just buy a dip and hold forever and you win that way, great. But most people say these things, right? Oh, I'm just looking for a dip. And they're actually incurring huge emotional losses. Let me give you an example. Okay. The best investors are dead. It's true. Statistically, the best investors are dead. The second best investors forgot they invested. The worst investors are the people that actively manage their portfolios. Copious amounts of data. Okay? So here's what happened. Multiple, I'm amalgamating. Okay, there's multiple people that did this, but one in particular that I'm going to use as an example. They have, I know somebody that has probably $1 million, maybe $1.5, $2 million in Guard BUSD LP, and they put another $250,000 in, and they couldn't decide between buying Guard or pairing Guard BUSD, and a little bit of greed creeped in, right? And they decided to just buy Guard to keep all the upside. And what happened is when this started coming down, they sold at 340. They sold at 340 and then bought back in at about 360. They lost money in this short amount of time frame. However, that $1.5 million or $2 million they have in Guard BUSD was sitting there getting, 52% over the last 15 days. So in hindsight, well, if I just had all my Guard unpaired, I'd make more money. One, that assumes you have a crystal ball. Two, it assumes you would have behaved the way that you assume you would have behaved, but the reality is nobody actually does. The people that are winning consistently, blowing everybody else away, not selling low and buying back in higher, are the ones sitting in, they're the equivalent to dead investors. Now, there's a few ways to do that. Sit in an auto compounder and be done with it. You could drop your Guard in a Citadel. Right? Just drop it right here in a Citadel and forget about it. Either way, watching the charts on a short time frame, if you claim to have a long time frame, does not help you. And going, I only get 8% over here, but Guard is ripping, that is not accurate math because you did not only get 8% there. In an auto compounder, you actually got 52%. This is on track to do 100% in a month. 100% in a month. That is the real data. This is dropping it in and forgetting about it and then saying, I put this much in, 15 days later, it's worth this much. That is the science of hindsight. Hey, that's how complex systems should be measured, in my opinion. I'll give you an example. Your Fitbit might say, if you eat this many calories, take this many steps, you'll lose this much weight. And then people eat that many calories, they take that many steps, they don't lose that much weight. And then what they do is they keep listening to their Fitbit. Okay, that is what you're doing here, is you're speculating based on some general number that with all these things are changing, just like biology, right? Your metabolic rate changes, it'll down-regulate, it'll up-regulate, rarely, yada, yada, yada. We can't actually measure how much weight you're going to lose if you take this action. What we do is we take the action and then we see how much weight we lost. That is the real world data. When I do X, Y is the result. In reality, for some reason, everybody is abdicating this to technology that is supposed to predict the future, but it never actually works out that way. Case in point, you did not get 8% in your farm. You didn't get 8% a year. You're about to get 100% a month. Okay? Science of hindsight. Complex systems need to be measured and then reviewed in hindsight, and then a rolling average is taken over time. Why does nobody do that, and why do a bunch of people fail at this? Because none of you are patient enough to get a rolling average over time. Patient people win. As Randy would say, the Stoics always have and always will own the Epicureans. Okay? I hope that makes sense. I have all my Guard in the Citadel. Great. As long as you just stop looking at the chart, you'll probably be just fine. Okay? You can have your macro belief, but to think that Guard has more upside period than Guard BUSD is not technically correct. Okay, because if you risk adjust it, that may not be true. Right? Especially, here's another thing to consider. If you buy Guard at an all-time high and you put it and you pair it with BUSD and auto compound it, it's much, no matter what, you're accumulating assets. Okay. So I'll give you two examples. Or I'll give you an example of the, let me see if I can make this work here. Okay. You buy a bunch of guard, which I totally encourage. There's a lot of people that I'm very good friends with that are very smart that are just buying guard, and that's fine. But they know not to push buttons. You are much more likely to make bad decisions if you have a single asset and you're watching the chart all day. You're going to get wrecked more often than not. Okay? So one person buys guard. The other buys guard BUSD at an all-time high. The price goes down, and it stays down for, let's say, 2 or 3 days. Guard doesn't stay down for very long. Here's the difference. Person one is sitting in a deficit that whole time. So emotionally, they have to understand how this works or they'll make bad decisions. Person two, auto compounding, they're accumulating more guard and more BUSD the whole time. So when it does recover, guess who's ahead, right? Chasing upside. There's no reason to chase upside if you have a solvable problem. Trademark, certainty app, right? So just something to think about. No judgment, whatever you want to do, but make sure you are thinking about data the right way. Okay? Make sure you're thinking about data the right way. There's no issue at all with just buying guard. Over time, I believe that is a phenomenal decision. In a vacuum, I believe it's a phenomenal decision. Most people cannot handle the volatility. People are actually losing more money buying just guard, not because it's a worse investment, but because their behavior is worse when they buy a single asset and just watch it. Frequency of exposure. And again, what kind of greedy a-hole, and I mean this sincerely, what kind of greedy a-hole says this is not enough upside? You tell people 70% a year and they think you're full of it. They're skeptical. You show them 50% over 15 days, and it's not enough. Like, think that's a version of a mental accounting bias, right? Like, when it's presented this way, 70% a year is life-changing, unbelievable. How is this possible? But when presented a different way, or seen, with the science, when you see the guard chart with the Science of Hindsight, we go, look how much upside I'm giving up, even though we're outperforming significantly by many, many multiples the thing that you recently thought was life-changing and nearly impossible, right? Jason in the comments says, Dala. Yep, Dala. Don't act like an asshole, D-A-L-A. You are acting like an a-hole if in the same breath you think 70% a year is unbelievable and life-changing, and in the same breath, you will put yourself at more risk because 100% a month is not enough. Think about that. This is so unsustainable, but it's not. And so your solution is to actually take on more risk, even though the original thing is outperforming the thing that you felt might be unsustainable. Dala, don't act like an asshole. Be aware of just awareness of your own thoughts and feelings, right? So then it comes to the 3 filters. And I've talked about this before. I'm not going to spend a whole bunch of time on it. But here's the 3 filters, okay? Literate. Most of you stop here. This is why you get duped. You get duped by marketers, and you dupe yourselves a lot of times. The literate is what is said. This torches body fat. Oh, cool. I want to torch body fat. First of all, we know you're not actually holding a torch to your body fat because body fat doesn't actually burn with fire. It's oxidized. You breathe it out. So, but we go torch body fat. That sounds good. This is falling for the literate. Okay. Most people stop there. We need to go to the next step, which is say, okay, we run it through the literate filter. Okay. What do they say? Great. What are the numbers? That's why for guard, our only marketing we're going to do is publish the numbers. That's all we're going to do. And people will still find ways to wreck themselves, and that's fine. But we say, what are the numbers relative to what? In what time frame? What scale? Right? Some people make it that far. The people that claim to be data-driven think they're doing this. They're doing it poorly most of the time. But at least they're trying to get the numbers together, right? They're doing good calculations, but poor mathematics, meaning they're, the point of math, just so you guys, in my opinion, just so you guys know, the point of math is not to be good at computations. That just makes you a slower calculator. Calculators are faster than you. So it's not about getting your computations right. It's not about, well, 7 plus 7 is 14. And if you add another 10, that's 24. Good mathematics is knowing which numbers and which formulas you actually should use to fit to this situation. I see a lot of good computations inside of the wolf den and a lot of poor mathematics, right? Yes, that formula is correct. It's not the right formula to use, okay? So once we get the numerate down, the question is then comes from ecology. And then what? And then what? So let's say we have a solvable problem. I need $10 million by May 19th, yada, yada, yada. I'm starting with, let's say, 1. So I need 18% a year. And you see a big green candle on guard, and then it goes a little bit red, and then you sell, okay? You didn't get your full 10 million. Let's say you got, I don't know, you pulled out, you put in $1,000 and you pulled out 12 grand. Cool, 12x. And then what? You're here and you want to be here, and we have a system to build a bridge across systematically and sustainably and reliably. And you kill the bridge and you got your 17 grand, and then what? You better have somewhere to reallocate it. I'm not saying don't sell guard. I'm saying you better have somewhere to reallocate it to finish closing the gap. Otherwise, you have half a bridge and you're up shit's creek without a paddle. This is the question where people are like, oh, I made a 10x return. Who cares? Honestly, it's very counterintuitive, and you may disagree. I'm just considering that you think about this. Who cares you got a 10x return, and then what? And then you buy some groceries and you put it in a shit coin and you lose it and you're back to ground zero, right? Or you put it in the stock market, you get 8%, which is fine, but that 8% is not going to fund the life that you want. So now you're just locking in misery. Most prefer the certainty of misery to the misery of uncertainty. Okay? It always comes back to this. Most prefer the certainty of misery to the misery of uncertainty. So if you haven't considered, and then what? Okay, cool. I got it. 20x. Did you solve the problem? No. Do you still have a huge gap? Yes. How are you going to close that gap? I don't know. Well, then you're not in a better position. You're in a worse position. You have more cash in the bank, but you are in a worse position because you went from funding the thing that you on track to fund what you want to having no idea how to get what you want. Does that make sense? I hope that makes sense. Okay. This isn't about more, right? Like, oh no, what if this crashes? What if I get it? I understand. We got to think about that in real estate. We got to think about that in crypto. We got to think about that in the banking system. We got to think about fiat losing buying. But we have to consider these things. But the question is, if you don't have somewhere else to reallocate it in order to get what you want, what is the point of having it? Question, right? You don't have to agree. Just consider. I'm asking you to consider some of these thoughts. Like, yeah, cashed out. Boom. What does that represent to you? If that fully funds your retirement, awesome. High five. We will celebrate you. But if you just took some cash and now you have more, what happens is most people just end up buying back into guard higher. They actually lost ground because they haven't thought through the echolate. And then what? What are the second, third, and subsequent order consequences and behaviors that will need to happen if I'm closing the gap? Most people aren't closing the gap. Most people are not going to get what they want because they're just going to keep chasing more. And then whether they get more or not, they're not going to know how to reallocate it, and they're going to end up chasing more, and they're going to lose what they got by chasing more. Very human. Now, again, if you plug into this certainty app and you need 18% to fund all your goals, you know what? Drop it in Anchor Protocol. Anchor Protocol will give you 19% stable. Boom, done. This is not a sales pitch for Guard, BUSD, or the Wolf Den. This is how to think so that you get what you want. Now, personally, if you have larger goals or shorter timelines and you need a higher return, I am going to make the argument every time based on my beliefs. I will never tell you what to do, but I will believe that Guard BUSD base case is the most reliable way to get there. Anchor won't give you this. The S&P won't give you this. You have to take a lot of risk building a business or trying to make this happen in real estate. A lot of work. Or you could just drop your freaking guard, BUSD, and auto compounder and forget about it, right? Back to Dan's CCA methodology, we're always looking at least amount of risk, least amount of effort, most amount of options. That puts you in the strongest position possible at all times. And we think about playing chess. A lot of people are playing checkers. Got to move forward. Need more money. Step forward, step forward, step forward. Life is not like checkers. It's like chess. In the game of chess, you're always strengthening your position on the board, right? Because you never know what's going to come at you. So the game is getting a stronger position with every move. It may not feel like a move forward, but if you're in a stronger position, you're going to be better off. That's a risk adjustment, right? Less risk tomorrow. I'm looking at comments real quick. Cool. So hopefully this just give you some things to think about. This is what we talk about in the Wolf Den. This is what we work about the Wolf Den. Outside of crypto, this is what we do in the CCA and the Certainty Program. Because it's not the technology. It's that humans just act in a way that is diametrically opposed to what they say that they want. And sometimes they're lying about what they want. Sometimes they're honest about what they want, but they're behaving in such a goofy way. Dala, don't act like an asshole. That's all we're trying to do here. Okay? So we talked about this. Guard your guard, right? If you have a macro belief in guard your guard. How do you guard your guard? I will tell you how you guard your guard. You guard your mindset and emotions. You build a system to protect you from the things that you know are likely to get you to make bad decisions. You track the data in hindsight and you go, I need 43.5%. I already got that in 15 days. I need 43.5% a year. I already got that in 15 days. Cool. I'm on track. The end. Go live your life. Most of you don't want to live your life. You say you do, but then you just sit here and you stare at the screen all day. Just saying. That's my observation of much of the crypto community. I want to live the good life. Well, then go live the good life. What do you staring at the screen is not going to make you any more money. It's probably going to lose you money because of this frequency of exposure. Okay, so you got your mindset, you got your emotions, you set up bumpers. That's what I talk about in my book, Bumpers. It's all about appreciating when bad things don't happen. Most people in crypto, not in the Wolf Den in particular, but most people in crypto over the last couple of years, had they just bought Ethereum and did nothing, they'd be way better off than buying Ethereum and trading shitcoins. You can do the math. If you were trading shitcoins last year, a year ago, 2 years ago, do the math. I bet you would have more US dollar value in Ethereum had you bought Ethereum and did nothing than if you bought Ethereum and sat here all day trying to trade. That is almost always the case. Same with Bitcoin. That's actually, there is a ton of data that says people that bought Bitcoin and did nothing over the years, DCA into Bitcoin, have more Bitcoin on average than people that tried to day trade Bitcoin to get more Bitcoin. So unless you think you're the smartest human in the entire market, which some of you might, then more moves is not better. If you think doing more stuff is better, then you think very, very highly of yourself. Like top 1% of the 1% of the 1% in the market. Like you're going to outtrade people that have day traded Forex for 20 years. And they do have a huge advantage, right? Because you could have been trading Forex for the last 20 years. You could only have been trading Bitcoin for the last 12 at the most, right? So people that traded Forex are the best traders of crypto. Not always. All right. So more stuff. Let's talk about Wolfish on the Den. Okay, here's some cool stuff happening. There's a link in the description of this YouTube video. Stock market index funds outperform day traders 94% of the time. Yeah. Yes, always. I mean, like 94%, that's a significant amount. Most people, here's the thing, before I go on to this. Most people don't know how to not have a job. They try to turn everything into a job. They say they want to be investors, and they turn it into a job, and that wrecks them. Be honest with yourself. You want a job. If you really want to be an investor, align your behavior. Put money in. Do your research. Put money in. Come back in 5 years. If you wanted to act in a way, it's like you would invest in Tesla, and then you wanted to do something. You would promote Tesla. You would do things that brought up the value and educated people on Tesla. That's how you would actively help your investment, not sitting here staring at it, right? Speaking of actively helping investment, some of you know about the Luna Den. The Luna Den is Callie, who is on our team. So some of our best videos are from Callie, and Courtney, who is a CCA student. She's getting certified in our methodology of decision-making, concepts, principles, mitigating downside, education, all that stuff. They have started the Luna Den. This is the wolf den for ladies, okay? And they have a very different teaching style. It's a little bit softer. It's a little bit, I just kind of roll. And that's very, very important because, as we have shared in Diffusion of Innovation, right, the degree to which something diffuses, right, a new idea grows, is directly correlated with how much reinvention is allowed. So I'm encouraging Callie and Courtney. I'm helping them however I can. Of course, they're doing their own thing. To reinvent it, change the language, help people understand the concepts, make different videos. So there's a link to that if you have a wife, a girlfriend, a sister, a daughter, if you are a woman yourself and you want to hear the same thing, same concepts and principles with different style, different tone, different context, go check out the Luna Den. Right? This is fantastic because the Wolf Den alone has done amazing things with Guard, Wolfies, Knight, so on and so forth. This is basically just bringing on another force. This is very, very wolfish for Guard BSD, for the base case, for Knight, because now we have a whole new set of holders rolling into the base case, right? That's very good. Very good. And the other thing about it is look at the Guard chart. Like, people are like, you need to market more. When are you going to get a central exchange listing? Look at this effing chart. People that ask that don't understand diffusion of innovation, right? Because what would happen is you get a bunch of pump and dumpers, a bunch of FUD, a bunch of people trying to scam people in Telegram group with all that attention. The appropriate way, in my opinion, to diffuse an idea is exactly like this. We teach these early adopting, unusually perspicacious women the concepts and principles, and they pass it on to the people that they jive with. Right, so Callie and Courtney and Laurel and Renee and Joyce and a lot of the women in the Wolf Den, they can understand and process what I'm teaching the way that I teach it, but a lot of people can't. So what they can do is understand it, process it, turn around and teach it in a way that introduces the methodology to a whole new set of educated holders. That is a zillion times better, especially for sustainability and over the long term, than like a central exchange listing with a bunch of public coming in uneducated, having no idea what's going on. This is, in my opinion, again, the appropriate way to diffuse innovation, ideas, new concepts, new principles, the base case, stuff like that. So I told you there'd be a little bit of education here. Hopefully you're not too bored with it. Hopefully I'm not over explaining. And if I am, it's to benefit everybody. Okay? So this is good. Diffusion of innovation. We just follow the diffusion curve. That's how you roll out things that are a little bit too new for the mass market to understand it. Introducing something to a whole bunch of people that don't have the capacity to understand it only introduces risk. It does not help. I know everybody thinks attention is everything. It's not. Not with something that is innovative. Okay? Only with something that is already understood. Something that is already understood by everybody, more attention is good because they already understand it. They know how to use it. They're not going to wreck themselves. They're not going to wreck other people. Sheriff Nick makes sense. Thanks. Okay, so Luna Den, check it out. Share it with any of your lady friends that maybe been on the sideline. Maybe they watch my videos and they're like, this Nick guy's not really my style. Go tell them, check out Callie, Courtney. This is how we diffuse. You also see that Forge, Finance, Tech Tree, Spartan, you guys know Joey, I'm sure, from Spartan. They're all doing a version of this. They're diffusing our concepts and ideas. They're reinventing them, and they're educating their way. That's incredible for the ecosystem. This is concentric growth along the diffusion curve, okay? Next, guard your guard, okay? How are you going to guard your guard? You have to guard yourself. Please read through. Go to wolfdencrypto.com. I'm going to walk you through the steps right up here. It says learn. Click on the white paper. Scroll down to safety and security and read this. Okay? Nope, that's not the safety and security. Scroll to safety and security and read this. And then I want you to think about this. This is probably the most important thing I can say today, so hopefully we got a lot of viewers here. Most important thing, base case and chill. Protect yourself. Protect yourself. You are in a DeFi world that everybody says, I want decentralized, I want decentralized. And this happened the other day. People are popping up scam groups called Wolfie's Guardian, Wolf Den, Guardian Announcements, yada, yada, yada. They're cloning our groups. Okay? And they're adding people. So they're just adding you to those groups, and you are thinking it's ours, and you're clicking on links, and you're getting scammed. Now, that sucks. And the first response, I didn't let it go to see where it was going, was like, it was obvious that somebody in our group was reading conversations to model our conversations over there. But it's a public group on Telegram. You want to be decentralized. That's how it works. We cannot micromanage a decentralized public group. That's not appropriate. What needs to happen is that you as holders need to understand the risks. You go into Telegram and you change your settings so that nobody can add you to groups without your permission. Otherwise, what happens is people get scammed. Good people get scammed. And then they go on witch hunts for scammers. And you are now no better than the scammers. Okay? Witch hunts are not healthy. They're not good in an anonymous world. So you protect yourself. You do not understand the risks, fall for a scam, or get scammed. It sucks when that happens. It's happened to some of our team members. Fortunately, it has happened to me. It sucks. But the reaction is then, those spammers, I hate them. I'm going on a witch hunt to bury them all. And you go a little bit too far down that road, and you are a dangerous human. Okay? Protect yourself. Know the rules. Never respond to direct messages from anybody that you don't know and you have not verified that it's them, because anybody can make a Telegram with any name. That is the risk of being in a decentralized world in a public group. It cannot be micromanaged. It is no longer decentralized. Okay? It is no longer public. It is no longer decentralized. So you want the upside. You want the wild, wild west. You want all this stuff. Then please protect yourself. Know the rules. Know how to do that. Go through the security book, all that stuff. It's nobody else's job. We will do everything we can. Like, we don't, you see our Telegram is very quiet. We don't do any personal help. If you say I need help with something, we say open a help desk in the Discord. That is the only, so we have our rules. Our rules protect you. Okay? If you do not follow our rules, we cannot protect you within our ecosystem. There's a reason people come to the Telegram and they're like, hey, I have this personal problem. Can an admin please DM me? And we say, no, never, ever, ever ask for support like that in here. And they're like, well, aren't you supposed to be helpful? Yes, in a way that is safe and appropriate, which means if you need help with something, you need to go through the appropriate channels to verify who we are, so that somebody else doesn't message you pretending to be our team and scam you. Here's what happens. You lose your money, but if somebody steals $100,000 of guard and they sell it, you're also hurting everybody else. You're putting everybody at risk. So please protect yourself, protect the community, know the rules. Don't just jump into a Telegram and say, hey, I need help. When you jump in Telegram, a public, decentralized Telegram, and say, hey, I need help, you are putting your hand up saying, scam me. First person to message me can steal my money. And we don't want that. Okay? Does the same apply to Discord, not to Telegram? Yes. The difference is the way our Discord is built. You get support by help desk and tiers. No messages. Don't let anybody message you in Discord or anywhere else. Right? But only our official team can respond to help desk tickets, and only our official team has official team roles inside the tiers. That's why we push everything to Discord. It's easier to verify who is legit. Okay. Hope that makes sense. It's all, people think we're being like dicks because we don't let you act like children like every other group does, but every other group is putting you in a significant amount of risk, and I refuse to do that. I refuse to facilitate it. It's going to happen. You guys are going to do what you do, but it's not going to be our rules, and our behavior will not facilitate putting other people at risk. Okay? You got tiers in Discord, you got help desk, block all, make it so nobody can directly message you or add you to groups on Telegram. That is a setting. That's our recommendation. Protect yourself, protect other people. Do not play a victim. Do not pay attention. Do not demand, well, you guys should meet me where I'm at. No, that's not true, because if we can meet you where you're at, so can strangers. You have to come to our official channels to get what you want, because it's the safe, responsible thing to require. You can't say, well, can't you just message me and I'll help? No, because that means anybody can message you. They can just throw a Telegram with that looks exactly like mine and message you. Okay. So that's appreciate the ideas. Didn't pro tip: if I don't ask for ideas, don't give me ideas, please. There will be a time where I'll say, hey guys, I need help. Any solutions for this? The more things is not a solution. Everybody following the same thing is a better solution, in my opinion. The more things that you add, the harder it is to get everybody to follow the same flow. System reliability, I've talked about that as well. It's also straight out of ecology. The more components of a system, the less reliable the outcome of the system. We need a reliable outcome, which is maximum safety for people that follow directions. Hopefully that makes sense. Focus on your own behavior. I know people do dumb shit and they try to scam you and it's irritating. The question is, what could I do to prevent this? What can I do to prevent this? Not how do I attack this person and find them and burn their house down and threaten a whole bunch of people that might have done it. Always look inward first. Prevent it from happening. Preventative is better than corrective. Right? Preventative is better than corrective. It's cheaper. It's safer. It's emotionally easier to deal with. Okay. We all work in ratios, not absolutes. That is correct. All right. You guys ready for big announcement here? We are most likely, not 100% confirmed, 99.999% confirmed, we are most likely going to migrate Wolfies to a new contract. There's a very specific reason why. Okay? If you want some education, let me know in the comments. I'll tell you why, or I'll just tell you what we're doing. So over the next week or two, we're probably going to migrate Wolfies to a new contract. You don't have to do anything. You can buy it, you can sell it, you can do whatever you want with it. We're just going to airdrop 1-to-1. Okay? So you don't have to move them at all. Do whatever you want. Your best bet is probably going to be to hold on to them if you want the new contract. So, if you have 1 million Wolfies in your wallet, you'll get airdropped 1 million to the new contract. All those instructions will be made explicit. I'm just telling you that it's coming so that you are aware. It'll be in a week or two. We're going to migrate Wolfies to a new contract. That new contract is going to allow us to finalize all the tiers of the Wolf Den and make it the most powerful thing we could possibly make it. The current Wolfies contract was a limit to that. Okay? The very first Wolfies contract was poorly written, and that's my fault. And the reason we never migrated it is because it became so popular so fast. Okay, but in order to really dial in the wolf den, we're going to have to migrate it to a contract that is super clean with a super tight supply and all that stuff. Okay, now here is what happens. I've talked a little bit about inversely related investments, right? So for example, if we looked at Guardian and we said, or I'll give you a different context, okay, and then I'll bring it back. If we said, man, I'm really bullish on electric cars, like especially Tesla, really bullish on electric cars, and you invest a bunch in, you invest a bunch of, let me fix this. You invest a bunch in Tesla, right? And then you invest in the manufacturers and the vendors, and you pretty much cover, like you invested. At some point, it makes sense to go, well, what benefits if electric cars fail, right? This would be making an investment in an inversely related thing. So if electric cars fail, maybe you believe, wow, and I'm making this up, right? But if electric cars fail, I think Ford would it would get all the business. So then, even though your main bet is on electric cars, you might invest a little bit in Ford, not to get more, but to hedge, right? Intelligent investors are going to do that. They're going to invest, they're going to have a macro belief, and then with any overage, they're likely going to invest in the thing that benefits if their macro belief fails. So even though their primary investment goes down, the secondary investment goes up. Okay. Now, an example, Guard. What do we not want on Guard? We don't want a ton of volatility, and it's never been super volatile, but we don't want a ton of volatility. That's not good for base case asset, right? We're talking about business treasuries, a lot of money, stuff like that we really want to be not stable, but not super volatile. So instead of just putting more and more and more capital into making it stable, we have to understand a market will be volatile. It's a market. We can't just avoid it and be scared. So then we say, okay, what benefits from volatility? Somebody knows the answer because I taught this already, or I shared my perspective. Arbitrage. Arbitrage benefits from volatility. So it would make sense then to invest in an arbitrage bot, okay, so that in super volatile times, because, Guard will be this much on NightSwap and this much on Pancake, and there's a short window where arbitrage bots will arbitrage that. Well, it's best if we have the arbitrage bot, right? So we level out the price as quickly as possible, and then we take the profit and we buy back Guard. Okay? So how do we benefit? So we're trying to avoid arbitrage, or we're trying to avoid volatility, but how do we benefit from volatility? That's a question we need to ask and prepare for, so that the thing that we're trying to avoid actually benefits us. This is called anti-fragility. This is how complex systems should be built, in my opinion. Make sense? We can't just be afraid of everything. We have to acknowledge this could happen, and if it does happen, what would benefit? Because we want to be the benefactors. We want to be the one that benefits from this thing happening, so that we could put it back into the original thing. Okay? So that's an example. Now, that is an example of taking volatility and turning it into stability, just by understanding how some of this stuff works. Okay, so boom, we just took a bad thing and turned it into a less bad thing. Because volatility will happen, and arbitrage is going to happen anyway. It doesn't make any sense for us to not be the arbitragers, so that instead of a third party getting the profit, Wolf then gets the profit, buys back Guard. We just took a bad thing and made it less bad. Right? Anti-fragility. We win when things go our way. We also win when things don't go our way. Right? For those that don't know, anti-fragility is when you benefit from the unexpected. You benefit from the thing you're trying to avoid. Not a lot of people think deeply enough to build this, but it's everywhere. There's opportunities for anti-fragility everywhere. Okay? So here's another way it can be done. If you are familiar with Terra Luna, Okay, the Terra ecosystem, Terra is extremely volatile. You see this? It probably doesn't even do it justice here. Terra is extremely volatile. Like, it is a ride if you're watching Luna. This is by design, believe it or not, because Terra it's essentially their currency. It's a layer 1. So it's like BNB or ETH or whatever, right? It's the Terra network, and you need Terra to run transactions. You need Terra to participate. The reason it's okay that it's volatile is because participants still bring up the rolling average, right? As long as there's people participating, there will be people that need to buy Terra, and over time, you can see Terra's gone up, but it's super volatile. Okay, this is how a currency or a layer 1 works. ETH, BNB, Matic, Phantom, all similar. Okay, in order to harvest your yield on NightSwap, you have to have BNB in your wallet, right? So the currency is a necessity to participate. That makes this volatility acceptable. This is not a buy and hold and expect it to go straight. Like, it's not a base case asset, right? You couldn't build a base case on this kind of volatility, but it's not supposed to be. It's a participation asset, right? Just like Ethereum. You want to do anything on Ethereum, you need Ethereum to participate. Okay, so we think of a currency as a participation asset, and they should be volatile, right? As there's more stuff to do, if OpenSea is bumping, people are going to need a lot of Ethereum. So Ethereum's going to bump. If OpenSea shuts down, we might see Ethereum dump down, right? It's participation, it's activity, it's just behavior on the network. Now, the other thing that Terra has is UST. It's stable, okay? It's stable. It's not backed by reserves like other stables. It's algorithmically stable. I would say raise your hand if you know what that means. I've been talking to a lot of groups of people. So it's algorithmically stable. How do they keep it algorithmically stable? I'd ask if anybody knows, but I'd have to wait for the lag to come through. At any time, you can trade 1 UST for $1 of Terra. Okay? Does that make sense? So UST might be 98 cents. Let's say you put $1 million in UST and you got paid 19% yield in UST, and you pull it out and it's only worth 98 cents. That's actually a pretty big loss if you had $1 million. However, you can trade that for $1 million of Terra, which you would then sell for cash, which effectively keeps UST right at about $1. It just gets arbitraged all the time. People make a lot of money just arbitraging that. Okay? So UST is always worth $1. It's almost never worth exactly $1, right? Like the asset itself. But it can always be traded for $1 of Terra, effectively making it $1. So it doesn't fluctuate much more than like $1.01 or 98 cents or whatever. Right? So you might buy it at 98 cents and then sell it for $1 of Terra. And then sell your Terra and there's profit, right? So that behavior, I'm sure there's bots, humans, all that stuff, that keeps UST right at about almost exactly $1 all the time. Necessarily, in order to provide stability over here, volatility has been introduced over into Terra, right? So money coming in and out and in and out, and UST being 97 cents, 98 cents, 99 cents, $1.01, right? Pulling out. So people will either, if UST is $1.01, cool, they'll just sell it. They're at a profit. But if it's 97 cents, it would make more sense for them to get to trade it for $1 of Terra and then sell the Terra, dollar per dollar, right? Which introduces volatility to Terra, right? So in order to stabilize, ultra stabilize one thing, necessarily volatility has been introduced to another thing. Okay? And it makes sense. There's no reason for Terra to be stable. The reason people are like, why is it going up? Why is it going down? Why is it going up? Is because they have no idea why they bought the asset they bought. If you buy Terra and you're worried about volatility, you have no idea what you bought and why. You have no idea anything about the ecosystem. And that's not anybody's fault but your own. Okay? So hopefully that makes sense. you can stabilize the part of the ecosystem that is built to be stable by introducing volatility. You can have another part of the ecosystem absorb that volatility if that asset makes sense to be volatile. I'm waiting for comments. See if I lost you there. Okay, so that's how UST, they have a stable token with no backed reserves, because you can always trade one UST for $1 of Terra. All they are doing is introducing volatility to the thing that is supposed to be volatile anyway, and removing volatility from the thing that is supposed to be stable. Cool? It's really helpful to navigate this space if you know how things work. It's very, you see Terra ripping, you're like, oh, this is going to go up forever. You might want to go over and see how the TVL on Anchor is, right? Because the TVL on Anchor and the volatility of Terra are directly correlated for obvious reasons, right? The more people that have to cash out UST, the more volatile Terra is going to be. The more people pulling money off of Anchor, the more volatile. The more people putting money onto Anchor, it's probably going to be less volatile. That's how the ecosystem is built. That's how it's supposed to be that way. So what happens here is this whole ecosystem works really well as long as people use Terra, right? Because people will always need to buy Terra to participate on the network. And as long as people are buying it, it will handle the stability, the stabilization of UST just fine, right? Over time, Terra goes up. I believe Terra will continue to rip up. I really do. It's going to be rough and rocky. A lot of people are stressed the fuck out right here. And this is what Wolfies is designed to do. Wolfies is a participation. It's a currency inside the ecosystem. So it says like, I have here this is the baby of the family. Let me fix this. Right? I'm trying to illustrate. It's supposed to be volatile. Its shenanigans make it volatile and predictable, meaning if we have a lot of activity in the Wolf Den, if we're doing a lot of games, and we're selling a lot of NFTs, and we're doing a lot of stuff, Wolfies is probably going to rip up. And if we stop, like right now, we haven't done a lot of activity because we're rebuilding things, Wolfies going to come back down. That's what it's supposed to do. It is a participation. It is a currency, right? It is the asset to which people participate within the ecosystem. Now, what happens to make it deflationary is we have our little hellhound, right? Wolfies is deflationary. It gets taken out of circulation over time. Okay? Terra is similar, right? So Wolfies, by design, should look more like Terra and less like Guardian. It's not supposed to be Guardian. Wolfies actually absorbs the volatility to stabilize Guardian. Right? It's a little bit different. We don't have a 1-for-1 swap because you don't want your Guardian to be worth $1, right? But we introduce the volatility, and through the taxes and the burns, all that stuff, it introduces stability to the rest of the ecosystem. Okay? And as long as people want to participate in the Wolf Den, then Wolfies will over time just creep up, right? It's basically our layer 1 network token. You want to do stuff within the Wolf Den. So again, I've told people this before, a long-term bet on the Wolf Den, if you wanted the speculative asset, would be Wolfies. Just like a long-term bet on the Terra ecosystem is Terra. It's just going to be volatile. You might want to scalp this. You might want to sell high, buy low, sell high, buy low. Guess what? All of that volatility, that we're built different than Terra, all that volatility actually benefits the ecosystem. So I don't care if you sell high and buy low. Everybody should be trying to make money however they want on Wolfies. You will get wrecked if you try that on Guard. It's built different. It's like trying to scalp UST. It doesn't really make sense, right? Especially when you have an asset that specifically is built to absorb the volatility of an ecosystem. Okay, so what happens now is Wolfies has a 4% tax. It always has. What happens now is the 4% tax on transaction, it will likely be 2% buy on Guard or Reserve. So we might just put in Reserve to buy back Guard to stabilize it. and 2% in BUSD or BNB. And then what happens is Silver Guard holders, which I told you all to get your Silver Guard, can then vote. Okay, governance. We will have our reserves built, and Silver Guard holders will then be able to vote on things like, where do we send our Hellhound? Do we buy back and burn Wolfies? Do we buy back a bunch of guards? Do we increase? Do we double the citadels? Right? So all this volatility on Wolfies is building our reserves, and then as a governance type thing, the community, Silver Guard holders in this case, can vote on where a percentage of those reserves go to stabilize the ecosystem. Okay, this is becoming more of a self-sustaining decentralized ecosystem, which was always the plan. Okay, in order for that to happen, we do have to migrate to a new contract that is built specifically to do this. Our current contract will not allow this. Okay? So hopefully that makes sense. We're doing all of this to an extent, but it's manual and it's exhausting. So we got to build it into the smart contracts now that we know how everything works. And we always see people that are like, why is guard going up and Wolfie's going down? All that tells me is, one, we didn't communicate this well, and two, people have no idea how the ecosystem works. Wolfies is not supposed to be a base case asset. It will rip up, it'll come down. It'll rip up, it'll come down. If you want to ride that, buy the dip and sell the tip and put it in your base case, great. All of that benefits the base case. All that volume, the taxes on all of those trades goes directly into supporting the thing that is built to be stable. Wolfies does not need support in theory. If Wolfies need support, that means people do not want to participate, right? The support, the buy pressure on Wolfies comes from people wanting to get into the wolf den, wanting to pay for things, wanting to participate in the games, the NFW farms, yada, yada, yada. Right? So this is Wolfies is a measure of how much people want to participate in what we're doing. Okay? Hopefully that all makes sense. So this migration is incredibly wolfish for guard long-term, short-term and long-term. And for those of you that are in the know, this is public, so nobody can say that there was no way to know this. Volatility on Wolfies actually makes Guardian a stronger asset. It also makes Knight a stronger asset, which I'll break down. I'm just keeping this super simple. So Wolfie's going up and down and up and down and up and down and up and down and way high and then way low and then way high and all that stuff. We are actually bulletproofing the rest of the ecosystem. What prevents Wolfies from crashing down to zero is that people want to participate. If people do not want to participate, fine. It's just like Ethereum. It's just like any other layer one. If people do not want to participate in Ethereum will go down. So our job is to make this a thing that people want to participate in. Hope that makes sense. Okay, and I appreciate the comments down here. All right, premium NFWs. Let's talk about some rewards. So for those of you that don't know, we have premium NFWs. They are auctioned off. What happens is somebody bought the very first premium, okay? And from that point forward, every dollar that comes into the NFT, the NFW marketplace, is split 50-50. 50% goes to our treasury, 50% buys back Knight or Guard or Wolfies, right? It goes to buying back, and then it's distributed to premium holders. Right? So the earlier you bought the premium, the more in profit you are. So the first person brought a premium for like 10 grand, and they've gotten a percentage of all the marketplace profits since. We often launch these, one, as an additional income stream for holders. Two, we celebrate partnerships, right? So this was our partnership with Treasure Key, AutoShark, Wizard, Knight. This was just Nightmare before Nick's missed because I wanted the cool one. This is Dark Knight. So we just celebrate this way, and it's a way to get we get BUSD in. Some goes in the treasury. The rest, it all buys back. It all buys back, and then some we keep in the treasury. 50% we kick out to existing holders. So it's all explained right here. And you can see on 9/30 we sent out I I think we're missing a number here. I think we sent out 18,000 BUSD to 4 holders. On 12/30, we sent out, I'm pretty sure we're missing a 0 on a lot of these. Oh, I'm backwards. So we sent out 1,877 BUSD to each holder, 4 holders, for a total of 7,500. On 12/30, we sent a total of almost 10,000 night. You see 9,176 night. On 127, we sent out 500,000 Spartan tokens. On 3/30, sent out 4,040 BUSD, and also 13,500 night, which is probably about $7 grand, a little bit under $7 grand there. And it just gets distributed amongst our NFW holders. Obviously, over time, whoever bought earliest is stacking up the biggest ones. Now, as this ecosystem grows, these pots are going to get bigger and bigger and bigger. Now, 3/30 was yesterday, so if you're a premium holder, this was sent out yesterday. We'll get the transaction hash so that you can check. We'll post it in Discord and maybe Telegram. But if you have a premium from before, you should have your you should have about 448 BUSD and about 1,300 night that you got yesterday. Okay. Again, as this marketplace picks up, the earliest holders, the earliest NFWs will be the biggest winners. And I got 3. I think I have 3 beautiful NFWs ready. I just didn't take the time to post them. I wanted to get one done before town hall. But we're going to get this marketplace bumping so that the early NFW holders get a ton of passive income now. Direct benefit to the ecosystem, as you can see, is that we use the BUSD to buy back ecosystem tokens. So here we bought back a bunch of night. Here we bought back a bunch of Spartan. Spartan buys back night. It's got a tax that buys night. So we typically use these funds to reward holders, but also support ecosystem. Typically, we're focused on night. That will change based on whatever needs the most support at the time. Guardian has never really needed any support, so we've never really had to buy much back. So you can check this out. I think this is the most recent one, sold for 16,000 BUSD. This one was 10. This is probably the cheapest one that we've got, probably because it has me on it. Nobody wants a picture of me. Totally get it. Spartan Wolf went for 22,000. So you can see these funds add up pretty quick and get distributed amongst holders. So congratulations to NFW holders. You got distributed yesterday. We'll get the transaction hashes out to you as soon as we have a little bit of time. Wolfsaw. Wolfsaw is one of my favorites here. I explained to Guardians how I organize things. So a lot of people think the thing that I'm talking about is the thing that I'm most focused on or the most excited about. That is not true. I always put the most exciting thing last, right? Just like dessert after vegetables type thing. So Wolfsaw, let me tell you a little bit about Wolfsaw really quick. I'm going to announce the winner. I'm going to announce this winner later today and the rest on Saturday. Okay, so somebody's going to win an ultra rare later today. I'll post in the announcement group, in the Discord, and the Telegram. You're going to want to be in the Wolfsaw announcement group here. It looks like this. You're going to want to be in here. Okay, Wolfsaw official announcement group. The link is in the description. I will announce a winner. You're going to get a top 69 out of 10,000 in rarity. Okay, and then I will transfer it over to you. And then Saturday, we're going to do some rounds. Okay. So you can still buy Wolfsaw between now and Saturday if you want to qualify. That's fine. Obviously, we're going to have a $5,000 prize for an ultra rare holder on Saturday. So what I want to do is I want to make sure that I have time today or tomorrow to transfer that over to them. Okay. And then we're going to give out, on Saturday, another ultra rare. Then we're going to give out $2,500 of Dark Knight to a Wolfsaw. Every Wolfsaw counts. Okay, and then we're going to give out $7,500 of Dark Knight. Now, only the ultra rares. So it's the top. I'll either do top 69 or top 489. Those are our two tiers of ultra rares. Are going to get $7,500 of Dark Knight. $7,500 of Dark Knight. Okay, so you want to be in the Wolfsaw announcement channel. I just ran out of migrating this Wolfies thing. Full transparency is taking up all of my bandwidth to get it right. So I'm dragging my feet here. I will do this later today and the rest of these will go out on Saturday. They will be announced in the WolfSaw official announcement channel. Now, WolfSaw is unique. It's unique because it is, one, a rewards NFW. You can see we're always giving out rewards, and those rewards are going to grow. Two, it is a game. It's an international soccer game, and there will be tournaments. Okay, so you'll build your team. It's probably going to be 11 on 11. That's how the game is being built right now. 11 on 11. So you're going to probably want at least 11 WolfSaw. 11 on, and again, you can still, there'll be plenty of ways to use them, stake them and earn all that stuff. 11 on 11, and it'll be something like, each player puts 100 Phantom in the pot. They compete, like bracket style. Winner walks away with 190 Phantom, 10%. The 10 Phantom goes into a pot, okay? And that happens through this bracket. So the winner walks away, almost doubles their money. They move on to the next round. They bet again. Other party bets. Winner walks away with most of the money. So it's bracket style. But that percentage that the winner's not walking away from, it's all getting put into a pot for the Sickle Cup. Okay, so the championship pot for WolfSaw is going to be massive, assuming people want to play. Okay, so it's bracket style. Again, just as an example, you pay 100 Phantom to play. Winner walks away with 190. That 10 Phantom left over goes to the pot. So you got 16 rounds, which turns into 8 rounds, turns into 4 rounds, turns into 1 round, and you end up with a pretty big championship pot for WolfSaw. There'll be one championship per year. Right, so like true tournament. It's going to be really cool. The game is being worked on right now. It's in development. It is, again, right now it's 11 on 11, 11 on 11 soccer tournament with huge, we're actually all fighting for the same international championship. So that volume will come through, right? All that volume. It comes mostly through Dark Knight, so big benefit Dark Knight. Dark Knight is going to explode. I'm not even looking at Dark Knight right now. I'm just waiting for what I know is coming. There's a trigger point in 3.5 weeks. So that'll come through Dark Knight, and then the Phantom rewards will grow, right? And the bigger those rewards, obviously, the rarer your WolfSaw, the higher probability you're going to have of winning, right? So the more rare the WolfSaw, the rarer the traits. And as that pot gets bigger and bigger and bigger, people will pay more and more and more to get your WolfSaw from you, so they have a chance to win that pot. So it's pretty cool. And the other thing that it's doing is this right here was developed by a 7-year-old kid who was told by his school he was in the bottom 2% of creativity. Little do they know that he launched like a $3 million NFT project, right? So we're really going to think about how to encourage kids to kind of be themselves probably through art, and kind of challenge some of the traditional school systems. And we're going to do a lot of that through WolfSaw funds, WolfSaw, the attention that it gets and all that stuff. So, it's much more fun and much easier to build strong children than to fix broken adults. I know this because I've spent most of my adult life working on fixing broken adults that don't have, they wouldn't have to be broken if somebody would have just given them another way to think earlier on. So we're going to use WolfSaw as the platform for that. So those rewards are coming. And Treasure Hunt. Doc Kev told me that he will announce the winners on Saturday because one of the Treasure Hunt items was a Dark Spartan NFT, and those are not even available until Saturday. So we don't know who actually has them until they are able to be minted on Saturday. Okay, so there's over $25,000 of rewards going to the Treasure Hunt. $15,000 of Spartan, $6,000 of Forge, and $4,700 of Dark Spartan. These are obviously all projects that support our ecosystem. We support them. The tax on Spartan buys back Knight. The tax on Forge buys back Guard. The tax on Dark Spartan buys back Dark Knight. So again, anti-fragility. Introducing volatility to these other projects stabilizes the core projects. Those core projects being stable brings much more opportunity and upside to these projects, right? The trick is just understanding how complex systems work and keeping asymmetry to the upside. Hopefully that all makes sense. Now what I'm going to do is I'll look through the the comments, see if there's anything worth responding to. I hope that was useful to you guys. I'm doing my best to educate as we go, so I can show you examples instead of just talking conceptually. I could say, like, you're going to see this tomorrow and this is why, so that when you see it, you can process it in real time. And yeah, we're going to work really hard on helping kids figure out who they are or remember who they are, because adults don't have to figure out who they are. We go through this process with Dan Nicholson and Randy Massengale called Playing Your Game. Adults don't have to figure out who they are. They just have to remember, honestly. So it's like, how do we get kids to not forget who they are? Just start build systems and start building their life around their unique disposition before they forget what it is. And part of that is learning how to navigate other children socially, other parents, their own parents, adult figures. You know, like, you can't just tell adults to F off when you're 9 years old. So it's just helping children navigate some of the more difficult things that they're just going to have to work through as they become adults. So that's one of the causes. Obviously, Cleater is a thing. The Wolf Zen. I don't like sharing this stuff because it's a little. But I'll share with you guys. I did buy 400 acres of mountains. So 400 acres off grid in Arizona, about 2 mountains. It's got streams. It's got like desert oases, like there's palm trees because there's water at the surface there. There's actual springs. I think there's 3 of them on the property. And again, it's 400 acres. It's huge. And we're actually going to use that to do as much good as possible. Like, the whole thing is raising, elevating the consciousness of preferably young adults, but all humans. So I don't, people get really stressed out when they know that you bought stuff. But that's what, that land, it's fun, like, I've got a bunch of land, and who owns mountains? Owning mountains, it sounds cool, but there's a novelty to it, but it's really, that space is used to try to make the world a better place through developing people. And all that will become clear later on. And obviously the Wolf Den, you guys are all invited. It'll be a combination of the Wolf Zen and Gray Wolf. So I think the LLC will probably be Gray Wolf. This is what got my attention when I first looked at the game. Cool. So if we want to move up tier, should we wait for the new launch of Wolfies? No, I don't want to tell anybody to wait. It won't really make a difference. You'll end up with the same number of Wolfies either way. It won't really make a difference. Just behave as normal, because I don't know when it's coming. We might run into some contract issues. And so just behave as normal. And the way the airdrop works is, if however many Wolfies you won't lose access to any of your tiers. However many Wolfies you have in your wallet, you'll get airdropped. So it all comes out in the wash. We don't want you waiting around wondering what's going on. Just behave as you would typically behave, and everything kind of comes out in the wash that way. Cool. All right, Guardians, I will send a link to join the 11 o'clock. That is in 37 minutes. Cool.